A real estate investment trust, which is also known as a REIT, is a way for people to invest in property without actually purchasing the property. So a real estate investment trust, they can own or they can finance or pay for or they can operate income producing real estate. So instead of having to go out and buy, say, an apartment and then rent it out, you can instead invest in a real estate investment trust that will do all of that stuff for you. But the downside of this, of course, is you have a lot less control over your investment and you're more dependent on their management, their skills, and their decisions. But the plus side is it's pretty much hands off. You just invest in the real estate investment trust and they'll do the work for you. It's kind of like an ETF, an exchange traded fund. So I've put up a video before. I'll put one of the cards up in the top corner. But I put a video up a while ago of all of my real estate investment trusts. I think I've quite a few. I've added one new one, and it's a monthly paying UK real estate investment trust. But how they work is the reason people invest in them and like the appeal of them is that they have to pay at least 90% of their taxable income out to shareholders. And the reason they do this is they can pass their tax burden on to the shareholders instead of having to pay it themselves. So the benefit to them is they avoid the taxes, and our downside is that we have to pay them. But on the other side of that coin is they have to pay out 90% of their earnings at least, and then we receive that 90% spread out between all the shareholders. So when they pay out, it basically creates a tax burden for us, but they then don't have to pay the federal income tax, which means their yields and their frequency of payment is often very high. A lot of my monthly paying stocks are real estate investment trusts, mainly from the US and the UK. I think entirely from the US and UK. There was actually one new one that's not in the old video. This one, BMO Commercial Property. I just added this one. It's a monthly paying UK real estate investment trust. So some of the reasons that people invest in real estate investment trusts is, of course, the yield and the frequency of payment, and also to get involved in property without actually having to go out and purchase property and then rent it out and deal with tenants and things like that. Any management expenses or all the time you have to put in. But there is quite a bit of downside to real estate investment trusts because they have to pay out such a huge amount of their earnings, almost all of it. So the growth of their stock is commonly quite weak. Like you wouldn't get fantastic growth out of them because they can't put that money back into their own company. So they tend to generally, they'll go sideways or decline for a bit and then recover and then decline again. And there wouldn't be fantastic growth like something like Amazon or Berkshire Hathaway. Berkshire Hathaway doesn't pay a dividend, so they put all of that money back into their company. And now one share of Berkshire Hathaway costs $423,000 per share. That's what can happen if you know what you're doing with your money and you invest it back into your own company wisely. But because REITs have to pay so much out, they can't do that. They can't grow exponentially. They are also quite risky because of this big payout. They'll either cut the dividend because they can't afford to pay it, or they'll be paying way more than they can afford, which you don't want that in anything you're investing in. So there is quite a few different types. If like my strategy at the moment is hundreds of dividend paying stocks, and I wouldn't recommend it because I don't know if it's going to work. But if you were choosing your own real estate investment trust, what a lot of people usually do is they'll look at the histories. They'll pick the country first, of course, but they'll look at the history of the stock, the payout, how the stock has appreciated or depreciated. But also, it would depend on the type of real estate investment trust, because there's a few different types. Because they can not only own the property or finance it, pay for it, or operate it, but they can also own the mortgages that are attached to these properties or mortgage-backed securities. So you can have a REIT that only deals with mortgages, or one that's in the healthcare sector, one that's in offices, one that's in residential or retail, or loads of different ones. So there is quite a lot of variety that you can choose. And it's entirely up to you. But I would, in my opinion, what I've found easiest is to go with the most popular ones first. If you're just starting out with investing, the lesser known, like any dividend stock at all, but say REITs for this example, the lesser known ones are a lot harder to get information on. And, when something happens, like if the price drops 10 or 20% in a day and you can't find out why, it inspires a lot of fear. There's a lot of very popular ones you can start out with, and then you can get used to price fluctuations and the amount of dividend payments you receive and how much before you start dabbling in the more risky ones. But this one, say for example, Whitestone is my largest holding at the moment. I think I put €80 in. But it's engaged in owning and operating commercial properties in culturally diverse markets in various metropolitan areas, based in the USA. So this pays 3 cents per share per month, and it's $10 a share. So I have 11 shares, which cost me, I think it was €80. Yeah, it's gone up 14, so it was about €82. And the reason it's my largest is because when I invested in it first, there was a lot of talk of how much potential it has and how e-commerce proof it is. So I'll stick the card up for this video of the little breakdowns of each of these real estate investment trusts. But if you were thinking about investing in one, best thing to do would be to look up the best ones, best yields, best consistency of payout. Probably one of the best ones would be Realty Income. This one. So it's been paying out its dividends. I did a video on it the other day, but it's like 600 consecutive months of dividends. And it's been increasing them as time goes on. Survived 8 recessions. This would probably be the best one. If you're doing your own research, you'll probably see this one a lot. But there's plenty to choose from. And they're popular for a reason. There is quite a bit of downside, but there's an awful lot of upside. That's another great one, AG&C. It looks like it's consolidating a bit. Might be a nice price to get in. Anyway, that's it for this one. And I hope that you found this useful.